Is this the shift for the markets that we should be waiting for, or should we dial back the euphoria? Let's ask Tony Dwyer, Cannacord Genuity, Chief Market Strategist. Tony, thanks for taking the time here today. We'll put that question to you. Disinflationary, is that the shift or the pivot in tone, at least, that the markets were looking for?
Well, it's what is supposed to happen when you have economic weakness and you start to see a drop in activity and especially final demand. You're supposed to have disinflation. So, our view has been that inflation isn't the issue it's actually been this way for the last few months. Inflation's not the issue. It's going to ultimately be economic activity and the unemployment rate. So, each comment that he makes is taken, as gospel. But as you know, it's pretty volatile around whether it's right or wrong.
And Tony, in your note, I love your analogies. We love analogies in general in Strategist Notes. This morning, you counseled patience in your reaction to the Fed. You talked about a slow cooker pot roast as the way to go. Talk to us about what you meant.
Julie, as you know, for all these years that we've talked to each other, I think I get more stuff out of my headlines than I do my data. But anyway, every single word, like disinflation is the word today. And clearly that is showing some strength in the market. The market has already been very strong coming off of that, the low for a lot of the mega cap tech stocks. But we're taking it's like trying to eat a pot roast out of a microwave. Do you want to eat it out of a microwave or do you want to eat it out of a slow cooker? Guys, this is what is supposed to happen. I think I probably underestimated the positive effect of this transition from solid growth to negative growth. It would be historically unique given where the Conference Board leading economic indicators are, where the yield curves are, to not have a recession. So I think what I underestimated was the positive influence that would have in an oversold tech sector and some of the mega cap stocks. But ultimately, we're in this transition where the pendulum is swinging, and right now it's in the sweet spot. The call that the market is making is that it won't go to the more difficult position of potentially negative economic growth. For example, Julie, I can't remember. I've been doing this about 35, 36 years. I can't remember when cost cutting was the new buy signal. Right.
Yeah,
so you look at some
unusual.
of these, you look at some of the companies that are out there and it's all about maintaining margins. And that typically happens when you have a weakening end demand. So in our view, right now, for the viewers, the fundamental side, I think, limits your upside because you have the potential for this recession. And the downside is probably protected by just the sheer momentum that we have. Ultimately, it's going to come down to the slow cooker, the unemployment rate, and when that defines if or when the recession is going to begin.
Sauce?
Tony, I would eat a pot roast out of a microwave. I'm just saying.
You can. Have at it. Well, I'd rather have it out of the slow cooker.
Fair enough. But look, what we heard, anything you heard from Powell yesterday, to you, would that suggest rate cuts of any kind, even one, are in the cards this year?
Brian, our base case has been that they're going to get aggressive by the end of the year. So we had thought that we had continued to think that the market goes back to the October lows in the first half on the back of a recession, but it gets nasty enough where the Fed starts to more aggressively cut rates than the market is anticipating. And maybe that's getting pulled forward to some degree. But to me, the bull scenario is not a soft landing. For example, today, when you have the continuing claims and initial unemployment claims, again, at near the best levels of the cycle, that's not suggestive of a labor market, which is what Powell's focused on, that is easing. So what if we get this period? If you get a soft landing, you still have an elevated inflation rate, and that keeps the Fed higher for longer. In a leveraged system, what you need is a steepening of the yield curve because rates are coming down more aggressively, and that allows you to look through the coming economic weakness. So to me, the soft landing scenario isn't the bull story. It's a much more aggressive, it's a decline in economic activity that brings about more aggressive rate cuts.
Always top analysis for us. Tony Dwyer, Cannacord Genuity, Chief Market Strategist. We'll talk to you soon.
Have a great day, guys.